The current bullish trend in the Nepal Stock Exchange, NSE, can be attributed to the Nepal Rastra Bank's (NRB) recently released monetary policy for the fiscal year 2024-25. The central bank has adopted a more flexible monetary stance aimed at stimulating economic growth, which has also had a significant impact on the stock market. Key factors contributing to the bullish market: 1. Lowering of policy rates. NRB has reduced the policy rate from 5 to 5% to stimulate economic activity by making borrowing cheaper. Lower interest rates tend to push investors towards equities as they seek higher returns, leading to increased demand for stocks and driving up prices. 2. Relaxation of loan provisions. The removal of the NPR 200 million limit on share collateral loans for institutional investors has created more liquidity in the market, encouraging greater investment in stocks. This move is designed to boost investor confidence and attract more capital into the stock market, which in turn fuels the bullish sentiment. 3. Support for the private sector. By extending loan repayment deadlines and relaxing regulations around blacklisting, NRB has provided breathing room for businesses, which can now redirect resources towards growth and investment. This supportive environment is reflected in increased investor confidence in the stock market. 4. Expansion of credit. The central bank's goal to increase credit expansion to 12.5% demonstrates its commitment to ensuring sufficient liquidity in the financial system. This move is likely to support further investments, particularly in the stock market, as access to credit becomes easier. Potential for a bubble. While the current policies have successfully boosted market sentiment, there is a risk of a stock market bubble forming if the rise in stock prices becomes disconnected from economic fundamentals. The increased liquidity and relaxed regulations might lead to speculative trading, where investors buy stocks with the expectation that prices will continue to rise rather than based on the intrinsic value of the companies. In Nepal's context, the sustained influx of liquidity into the stock market without corresponding economic growth or improvement in corporate earnings can lead to inflated stock prices. If this situation persists, it could result in a bubble that might burst if investor sentiment shifts or if there is a tightening of monetary policy in the future. The NRB's monetary policy, while providing short-term boosts to the stock market, also needs to be monitored carefully to avoid creating an unsustainable asset bubble that could have negative consequences for the broader economy when it corrects. Potential risks and precautions. As Nepal Rastra Bank (NRB) implements its flexible monetary policy aimed at stimulating economic growth, it's important to consider the potential risks of such policies and the need for caution. 1. Risk of overheating the market. The influx of liquidity and reduced borrowing costs could lead to excessive speculation in the stock market. When investors borrow at low rates and invest heavily in stocks, it can push prices to unsustainable levels, disconnected from the underlying economic realities or corporate performance. This creates the risk of overheating, where stock prices inflate rapidly, creating a bubble that is vulnerable to bursting when investor sentiment changes. 2. Dependence on external factors. Nepal's stock market is not isolated from global economic trends. If global economic conditions change, such as an increase in interest rates by major central banks like the U.S. Federal Reserve, it could lead to capital outflows from emerging markets like Nepal. This could put downward pressure on NEPSI, causing a sharp correction, especially if the market has been driven more by liquidity than by fundamentals. 3. Need for regulatory vigilance. To prevent the formation of a bubble, NRB and market regulators need to ensure that the market growth is based on solid fundamentals. This involves monitoring the quality of credit being extended, ensuring that loans are not being used excessively for speculative purposes, and maintaining transparency in corporate governance and financial reporting. Strategies to mitigate risks. 1. Gradual tightening of monetary policy. As economic conditions improve, NRB might consider gradually raising interest rates or tightening liquidity to prevent excessive market speculation. This could help stabilize the stock market by aligning stock prices more closely with economic fundamentals. 2. Enhanced regulatory oversight. Strengthening the oversight of margin lending practices and ensuring that credit expansion is directed towards productive sectors rather than speculative investments can mitigate the risks associated with an overheated stock market. 3. Investor education and awareness. Promoting financial literacy and educating investors about the risks of speculative bubbles can help temper irrational exuberance in the market. Encouraging long-term investment strategies based on fundamentals rather than short-term gains could lead to a more stable and sustainable market environment. 4. Diversification of investment options. Encouraging investments in sectors beyond the stock market, such as bonds, real estate, or other assets, could help diversify risk and prevent the stock market from becoming overly concentrated and vulnerable to shocks. Conclusion: Nepal Rashtra Bank's current monetary policy has played a significant role in boosting the NEPSI index by providing ample liquidity and reducing borrowing costs. However, the potential for these policies to lead to an unsustainable market bubble remains a concern. Both investors and policymakers should remain vigilant, focusing on ensuring that market growth is supported by genuine economic improvements rather than purely speculative activities. A balanced approach that gradually tightens monetary policy as the economy stabilizes, coupled with robust regulatory measures, will be crucial in sustaining a healthy and resilient financial market in Nepal.